Here is the situation. OpenAI, a leading figure in artificial intelligence, is navigating a fascinating financial paradox. Reports indicate that despite an anticipated revenue surge reaching an astounding $125 billion by 2029, the company is projected to experience negative cash flow until that same year. This financial trajectory, as reported by Bloomberg News citing sources with direct knowledge, reveals a complex interplay of significant expenditures and ambitious growth. The substantial costs associated with procuring advanced chips, establishing massive data centers, and attracting specialized AI talent are key factors influencing this near-term financial outlook. Simultaneously, the company is witnessing rapid expansion in its user base, with paying business subscribers doubling in recent months, surpassing 2 million in February alone. This growth fuels projections of revenue more than tripling to $12.7 billion by 2025, following an already substantial $3.7 billion expected in 2024. This juxtaposition of considerable investment and exponential revenue growth prompts a deeper examination of the operational dynamics driving OpenAI's financial strategy and its implications for the broader AI landscape. This financial situation, characterized by substantial upfront investment and deferred profitability, is not arbitrary. It stems directly from the operational necessities inherent in developing and deploying advanced artificial intelligence. The sheer computational power required to train and run cutting-edge AI models necessitates massive infrastructure. This translates into significant capital expenditure on specialized chips. The very processors capable of handling the immense data loads and complex algorithms at the core of AI innovation. Furthermore, these advanced chips are not simply purchased and deployed in isolation. They require vast data centers, purpose-built facilities to house and power these energy-intensive systems. The construction and maintenance of such data centers represent another major cost center for OpenAI, demanding continuous investment to expand capacity and maintain operational efficiency. Adding to these hardware expenses is the crucial factor of specialized talent. The field of artificial intelligence is highly competitive, and securing the expertise needed to push the boundaries of AI research and development requires significant financial incentives. Attracting and retaining top-tier AI researchers, engineers, and developers necessitates substantial compensation packages, further contributing to OpenAI's operational expenditure. However, these considerable costs are being incurred in parallel with a demonstrable and rapidly expanding revenue stream. The growth in paying business users, now exceeding 2 million, is a direct consequence of the increasing market demand for OpenAI's AI-powered services. This expanding user base, attracted by the capabilities of offerings like ChatGPT and other subscription-based tools, directly translates into recurring revenue. This revenue generation is further amplified by the diversified subscription model adopted by OpenAI. By offering a range of subscription tiers tailored to both individual consumers and enterprise clients, the company is effectively monetizing its AI technologies across a broad spectrum of users. This strategic approach to service delivery maximizes market penetration and ensures a consistent influx of revenue as adoption rates continue to climb. The projected tripling of revenue by 2025 and the anticipated surge to $125 billion by 2029 are not merely aspirational figures. They are reflections of a calculated trajectory based on current market trends and the increasing integration of AI solutions across various sectors. This exponential growth signifies a strong market validation of OpenAI's core technologies and the economic potential inherent in advanced AI applications. This projected financial pathway, therefore, highlights a strategic decision to prioritize long-term market dominance over immediate profitability. A calculated gamble on the transformative power of artificial intelligence. Yet this long-term strategic outlook is not without inherent risks. While the projected revenue figures are substantial and indicative of significant market potential, they remain projections. The actual realization of these figures is contingent upon numerous factors, many of which are outside of OpenAI's direct control. Market adoption rates for AI technologies could fluctuate. Competitive pressures from other AI developers may intensify. Unforeseen technological disruptions could alter the landscape of the AI industry itself. Furthermore, sustaining negative cash flow for an extended period, even with robust revenue forecasts, introduces financial vulnerabilities. Investor confidence, while currently strong, could be tested by prolonged periods without positive cash generation. External economic downturns or shifts in investment sentiment could impact the availability of capital required to fuel OpenAI's ongoing operational expenditures and infrastructure development. This situation stands in contrast to more conventional technology sector models, where companies often prioritize achieving profitability within a shorter timeframe to demonstrate financial viability and attract investors. OpenAI's extended timeline to positive cash flow signals a departure from this norm, indicating a willingness to absorb significant short-term financial strain in pursuit of potentially transformative long-term gains within the burgeoning AI market. This approach also differentiates OpenAI from companies focused on more incremental technological advancements and readily monetizable software solutions. The scale of investment in fundamental AI research and infrastructure, as undertaken by OpenAI, is more akin to long-cycle, capital-intensive industries. Industries where substantial upfront investment is required before revenue generation reaches a point of sustained profitability. This strategic posture, therefore, positions OpenAI less as a typical software company and more as a high-stakes technological venture, one that is betting on the fundamental and disruptive impact of artificial intelligence to reshape industries and generate unprecedented economic value in the long term, even if it means navigating a period of significant financial intensity in the present. Taking a closer look at this financial projection, it becomes evident that OpenAI's situation serves as a significant indicator for the broader artificial intelligence industry. The extended timeframe for achieving positive cash flow underscores a fundamental characteristic of advanced AI development. It is not a short-term endeavor yielding immediate returns. The substantial capital expenditure required for infrastructure, research, and talent acquisition sets a high barrier to entry for companies seeking to compete at the forefront of AI innovation. This financial reality may reshape investor expectations within the AI sector, potentially shifting the focus from immediate profitability to long-term value creation and market share acquisition. The projected revenue of $125 billion by 2029, while currently a forecast, acts as a powerful validation of the economic potential that many anticipate from artificial intelligence. Such figures, if realized, would demonstrate the capacity of AI technologies to generate substantial economic value across diverse sectors. This validation could, in turn, attract further investment into the AI space, accelerating the overall pace of development and deployment of AI solutions across industries. It also reinforces the narrative that AI is not merely a technological curiosity, but a significant future economic engine, one capable of driving substantial growth and transforming established business models. However, the path to realizing this economic potential is not without considerable financial risk. Sustained periods of negative cash flow inherently create financial pressure, demanding careful management of resources and consistent investor confidence. The ability of OpenAI to navigate this period successfully will be a crucial test of its long-term viability and market leadership. External factors such as shifts in the global economic climate or unexpected technological breakthroughs could also impact the projected timeline and financial outcomes, introducing elements of uncertainty into even the most carefully constructed financial forecasts. Ultimately, OpenAI's financial trajectory, as currently projected, reflects a high-stakes gamble on the future of artificial intelligence. A gamble predicated on the belief that the transformative power of AI will ultimately outweigh the substantial upfront investment and deferred profitability in the years to come. Looking at the larger picture, OpenAI's projected financial path holds significant lessons for the technology sector and beyond. The company's willingness to operate with negative cash flow for an extended period while pursuing ambitious revenue targets may establish a new paradigm for investment in deep technology sectors. This model could influence how investors evaluate companies engaged in fundamental research and development, particularly in fields like AI, biotechnology, and advanced materials. It suggests a potential shift away from a singular focus on short-term profitability towards a greater emphasis on long-term value creation and market leadership in strategically important domains. Furthermore, OpenAI's financial projections serve as a powerful signal regarding the scale of investment required to remain competitive in the rapidly evolving AI landscape. Other companies aspiring to lead in AI development may need to adopt similar strategies. Prepared to commit substantial capital resources over extended periods to build the necessary infrastructure and talent base. This could lead to a consolidation within the AI industry, favoring organizations with access to significant capital and a long-term strategic vision. The projected $125 billion revenue figure for 2029, if achieved, would not only be a triumph for OpenAI, but also a resounding validation of the economic promise of artificial intelligence on a global scale. It would demonstrate to governments, industries, and investors alike that AI is not just a technological frontier, but a transformative economic force with the potential to generate vast new markets and reshape existing ones. However, this projected trajectory also introduces a new dimension of financial risk into the technology investment landscape. The reliance on future revenue projections to justify current expenditures necessitates a robust and unwavering belief in the continued growth and adoption of AI technologies. Any significant disruption to this anticipated growth trajectory could have substantial consequences for companies operating under similar financial models. In conclusion, OpenAI's financial forecast, characterized by significant near-term investment and deferred profitability, is more than just a company-specific situation. It is a bellwether for the artificial intelligence industry, setting potential benchmarks for investment, influencing competitive dynamics, and highlighting both the immense economic potential and the inherent financial risks associated with leading-edge AI development in the 21st century. Therefore, OpenAI's projected financial trajectory transcends the confines of a single company's balance sheet. It embodies a strategic wager on the future architecture of the technological landscape itself. This approach, characterized by substantial near-term financial commitment in anticipation of long-term exponential returns, signals a fundamental shift in the calculus of technological advancement. It suggests that leadership in pivotal sectors like artificial intelligence will increasingly be defined not by immediate profitability, but by the capacity to sustain profound investment over extended horizons. This financial narrative unfolding within OpenAI thus becomes a crucial case study, illustrating both the immense economic allure and the inherent financial complexities of navigating the vanguard of the artificial intelligence revolution. The ultimate outcome of this strategic undertaking remains to be fully determined. Yet the trajectory itself provides a stark and compelling vision of the scale of ambition, investment, and risk, now defining the pursuit of dominance in the age of intelligent machines. Thanks so much for watching. If you enjoyed this analysis, and be sure to give it a thumbs up and hit that subscribe button for more geopolitical insights like this. I love hearing your thoughts, so drop a comment below and let's keep the conversation going. Share this video with anyone interested in deeper perspectives on current events. Until next time, stay informed and think critically. Thank you.